Indeed, your latest piece is titled, and I quote, BBC, and you use some very colorful scene to depict Jerome Powell, and correct me if I'm wrong, submitting to fiscal dominance of Mr. Besant while watching in his cuck chair.
So essentially what I'm arguing, and I think it's backed up by historical fact, is that the Fed chairperson...
A few weeks ago, you had a tweet that said, you think that ETH will hit 5K before Sol hits 300. My question to you, was that engagement bait, or do you actually believe that?
The way I'd couch this answer is, if I had a fresh unit of fiat and I had to decide if I'm going to buy Ethereum or Solana, I would buy.
What other altcoins then are you interested in that you find and you're also allocating towards?
I think the new management there is laser focused on getting retail adoption, bringing trading flows on chain. They're very energized. They have a fire under their ass. They have something to prove. I like them. Obviously, I think they could be an outperformer this next leg higher.
I'm curious, and feel free to pass on this question, but you were recently pardoned by the man himself. So my first question is, how did that feel? And then secondly, do you think he's a fan?
Trump signed our pardon, and thankfully the administration did.
Well, you're saying that none of you get like, I chose that pardon because I've watched a lot of Mr. Hayes interviews.
I would be flattered if he did. I'm not sure. I'm not sure if he does though.
So some rapid fire questions on predictions. So I'm curious. Firstly, Bitcoin cycle top price, and when do you think we could see that?
I think Bitcoin cycle top 2027. I'm going to go out there. Top price $1 or less.
And that's Arthur Hayes' cycle top 2027 prediction. GM Coin Bureau crypto fam, and welcome to another interview. Now, today we've got a really episode because we are, of course, joined by a returning guest who I am sure needs no introduction. He's the co-founder of BitMEX and the founder of Maelstrom, his family office. I'm, of course, talking about Mr. Arthur Hayes, a real crypto OG. So, Arthur, welcome back to the Coin Bureau, sir.
Thank you for having me.
Cool, man. So guys, before we kick off, a few quick disclaimers. Obviously, nothing in this interview is financial or investment advice. So please consult not only the disclaimer in the description, but of course, your own financial advisor. Now, Arthur, you have some of the most engaging writing around.
Thank you.
Indeed, your latest piece is titled, and I quote, BBC. And you use some very colorful scene to depict Jerome Powell, and correct me if I'm wrong, submitting to fiscal dominance of Mr. Besant while watching in his cuck chair.
Yeah.
What imagery, bro. I mean, it's poetic, sir, poetic. But yeah, the whole premise of this piece was around the Fed submitting to the whims of fiscal spending. So do you want to give us a bit of a TLDR of why you think Powell would submit himself to this cuckoldry?
So essentially what I'm arguing, and I think it's backed up by historical fact, is that the Fed chairperson likes to put out there to the market that they're the head of this independent organization. They're tasked with stewarding the strength of the dollar, making sure inflation is low and unemployment is low in the United States. When in reality, if you look at how history has actually panned out, the Fed is another arm of the government. And when called upon to do their duty and help the government fund itself at affordable levels, they do that. So if we go back to World War II, the Fed essentially merged with the Treasury and conducted yield curve control, printed money to fix the price of U.S. government bonds at 2.5% on the long end, in the bid to help the U.S. government rearm itself and fight the war and make sure it could do so affordably. In the 1970s, Arthur Burns wrote a famous essay called The Aguilates of Central Banking, and he basically lamented how, yes, at any point in time, the head of the Fed could squelch inflation, could raise the rate of interest, could restrict credit, and contract the economy in such a way that inflation was vanquished. However, the government and the politicians and the electorate voted for policies that embed inflation into the economy. And the Fed is pressured to do its duty to make sure that the government can do what its people want, which is spend money. And I had some colorful quotes from that particular essay. And, Greenspan had the Greenspan put in the late 80s and early 90s. We had Ben Bernanke with helicopter money after the global financial crisis. And Janet Yellen continued quantitative easing, and as the head of the Treasury, did her own form of money printing by shifting issuance to the short end of the curve to drain the reverse repo from September of 2022 until she left in late 2024. So all of these former Fed chair people have all done the same thing. When the government needs money cheaply in large quantities, they provide it. And so Jerome Powell is doing the same thing. And we saw his capitulation at the recent March FOMC press conference. So, by all respects, and I know stocks are down a bit on the year, but the S&P 500, Nasdaq, they're at, all-time highs. People who own financial assets in the United States are the wealthiest that they've ever been in history. You have unemployment at 4%, very low level. You have real GDP growth growing at 2 to 3% for most quarters post-COVID. This is above trend. This is a great economy. Yet Powell felt the need to say that quantitative tightening, which is reducing the accommodation that he provided during the COVID years, would slow down and basically stop by mid-year. He would tease the start of quantitative easing, money printing, essentially to buy treasuries. And, what I thought was quite hilarious was he said that the inflationary impact of tariffs was transitory at best, and therefore his easing bias is going to continue even if inflation shows up in the CPI metric. So, it doesn't make sense that Powell is having such easy monetary policy or not continuing to go very, very hard to crush inflation. Inflation is still above their 2% target. It's on something like 3% or whatever the PCE is at right now, but it's above 2%. It has never gotten below 2% since it crossed that level in 2022. So why is he stopping? Why is he not continuing to raise the rate of interest, restrict the amount of credit, and really destroy inflation? Because the US government needs to fund $36 trillion of debt that grows exponentially at an exponential rate of interest payments. And therefore, he needs to step up to the plate and print the money. And he's going to do it. And that's what he told us in March. And that's what basically really cemented my view of being very, very bullish in the medium term on crypto, because I believe that crypto really just trades off of how many units of fiat are there in the world. If we have the largest fiat emitter of the United States saying they're going to start trading on QE, you can bet that the rest will follow: China, Japan, European Union, etc. So that's essentially, the essay in a nutshell and my interpretation of that press conference a few weeks ago.
Okay. There's a few questions I want to follow on there. Now, obviously, you referenced Arthur Burns and in that same essay, Paul Volcker, right? And Powell says in the back of his head when he's sitting in the cuckold chair that he wants to be remembered as the Paul Volcker and not the Arthur Burns as it relates to inflation. Now, Arthur Burns obviously was, historically been seen as the guy who let inflation genie out of the bottle in the 70s around this fiscal dominance. So I guess there's two questions here. First of all, one of it ties into the inflation outlook, right? So do you think it couldn't be transitory? Do you think Jerome really believes that inflation, especially as it relates to tariffs, could be transitory? A. And then B, do you think if he is going to continue submitting to fiscal dominance, he's going to eventually decide this? He doesn't want to be the man that's remembered as the Arthur Burns and step away.
Well, at the end of the day, Powell's term is up in May of 2026, right? And so I think, if we're talking about, a return to 1970s style face-rippingly high inflation, I doubt that'll be at that level by, next year. This is probably a 2 to 5 year sort of story, as the impact of the realignment of the global monetary order is, going apace. And obviously the recent Trump tariffs have accelerated that. So I think Powell is going to exit stage left at pretty much the opportune time. And whoever accepts into that chair next is going to be credited with the inflationary spike of, the 2020s, essentially. So I think Powell's going to get off quite easy historically, because he's going to exit right before things go bananas.
So you do think whoever else is going to be on that rotation chair is going to be credited? Well, he's going to have to face this massive inflation. So you think we could see?
But I also think that person, I think the whispers are that it's probably going to be Kevin Warsh, as that's the dark horse for the next Fed chairperson. But he's firmly in the camp of, hey, the Fed is a political entity. We are here to print the money. We are here to make sure that the US government reigns supreme as the empire. We are here to make sure that, the dollar reigns supreme. And we're going to do whatever is necessary to assist the Treasury and the federal politicians to enact these policies. And so I think the next Fed chairperson is going to be fully on board with Trump's policies and what he is trying to do with how he's trying to realign the global monetary and trade order. So I don't think it's going to be some sort of like intellectual battle inside this person's head. They're going to be very outright, be like, look, this is what I'm here to do. I'm here to print the money. So let's do it. Instead of Powell, which is, it's transitory. It's not really inflation. I'm still really fighting that inflation thing. I really conquered it in 2022. Yeah. Don't say that I was the one who, reignited inflation. No. I did it. I did my job. I raised rates from 2022 to 2023. I did it. I'm the man, right? So in his mind, he did exactly what he should be doing. And he can pull whatever bullshit statistics he wants and, bandy them about the press conference talking about transitory this or that and feel good about himself in his own mind. That's what I think is going on.
Okay, got it. Yeah, indeed. Of course, the Fed is a federal government employee, and they will submit to what Trump's whims anyway, right? So,
they've done it to every other president, Republican or Democrat, whatever the political party is. The Fed always gives the president what he wants.
The Fed independence is like in name only, right? Another thing I was curious about, and it was also in the essay around the potential, and it comes back to the questions of liquidity. Obviously, you break down the QT and how this could potentially lead to about $240 billion of net liquidity with the end of QT, and then potentially rise into $420 billion by the end of Q3. I'm curious in terms of, like you've mentioned, obviously the SLR exemption, which is of course this bank ratio exemption that Besant has been talking about as well. And do you think that this could help impact on that liquidity picture, especially as it relates to banks being the marginal buyers of treasuries?
I think the SLR exemption is more important than the Fed doing this like matched QE by selling MBS and buying treasuries. If the banking system is able to take over the load of printing the money, they can do it in a fashion that's devoid of politics, because they're supposedly private institutions and no one can point to them saying they're being political favorites. We're a bank. If we can buy a treasury at whatever yield and put up no capital against it, it's essentially free revenue. So you have the treasury just handing money to the banks. And if rates rise and you have a loss, then they do what they did in 2023. Oh, it's a held to maturity loss. It's not really a loss. I'm just going to put it in this bucket over here. Don't worry. And so this is great for the banks. This is a profit generating bonanza for them when this SLR exemption comes through. So they can be very profitable. Bank stocks in the United States are going to do very, very well if they're allowed to infinitely leverage their balance sheets and suffer no downside. Because at the end of the day, if they fuck it up, the Fed just prints money and hands it to them.
Yeah. Just keeping with this topic around Fed and liquidity, I'm curious, a few days ago you tweeted that the Fed could be forced to bail out over-leveraged basis hedge funds. So, quote, QE by academic standards. Can you expand on that?
So, if we think about the marginal buyers of treasuries of the last 2 years, it wasn't the traditional sovereign wealth funds and central banks like the Chinas, Saudi Arabia, Japan, Germany, et cetera, right? They are on strike for various reasons. China's getting attacked by Trump in America saying, hey, we want you not to export all this stuff and earn all these dollars. So if they don't do that, then they can't buy any treasuries. So the exporters, the foreigners, they're not buying treasuries because they're being ushered out the door in terms of how the trade flows are generated. You have the Fed, which is doing quantitative tightening. So they're just allowing bonds to mature on their balance sheet. They're not actively buying. The banks, their balance sheets are full. They can't buy any more treasuries. This is why they need that SLR exemption. And so the marginal buyer of treasuries, when you look through the data in terms of who's buying all this stuff, it comes down to usually Cayman Islands, Luxembourg, and the United Kingdom, which are basically entities where hedge funds base themselves for tax advantage reasons. And this is where the growth of supply or ownership of treasuries is. As to what the trade is a hedge fund says, okay, there's a difference between the yield on a treasury futures contract and the underlying cash bond. I buy the cash bond and I hedge it by selling the futures contract. Now, this is a very, very slight differential in yield. So the only way they're going to make money that moves the needle is by using leverage. And so what they do is they go to a bank and they say, hey, I owe money to the United States Treasury for this bond that I bought in the auction. Can I repo this bond to you and get the cash in an atomic transaction? And the bank says, sure. And there's a charge for that. There's some sort of charge. So as long as all that nets out and they make money, they do this trade. And this is the basis trade. Now, the problem is that risk managers at the bank are going to say, okay, I'll give you a certain amount of leverage based on a certain amount of market volatility. If the market volatility increases, I want to ask for more collateral from you. I'm going to charge you more for that collateral. And so at a certain point, if the market volatility increases, and that can be due to stock movements or bond movements or currency movements or what have you, then this trade becomes uneconomical. The risk management department at the bank says, please put up more collateral. The hedge fund doesn't have it. And so then the trade closes. And now you've turned this buyer of treasuries, which has been supporting the treasury market and the auctions, to a seller of treasuries in an illiquid market that's extremely volatile, which is not good for how the market should function. And so what academics are saying is that the Fed should step in and take this trade off these hedge funds and essentially do this basis trade using their balance sheet, which is infinite because they can print as much money as they like. And so this is another form of stealth QE, because without these relative value hedge funds, there wouldn't be a 4% treasury yield. It'd be much higher because where's the buyer of debt, this massive amount of debt at this very, very low price, at this very high price. So I think this is another form of stealth QE. Yes, technically it's not quantitative easing by the textbook standard, which is what they'll tell you in the mainstream media. But this is the Fed using its infinite capacity to warehouse risk, to take risk from an entity that has a capacity that it has constrained by the banking system, and saying, okay, I'll print enough money to weather the volatility in the mark to market. Give me that trade, so now I can continue to fund the treasury.
Yeah, interesting. Haven't thought about it like that. Okay, so now quickly moving on. Obviously, the talk and the big news of the day is tariffs, and it has led to massive upheaval in the markets. And you brought up the fact that you love tariffs in a recent tweet, and that Trump is laser focused on those trade imbalances, which indeed he is, given the fact how they even calculated the tariff rates. And namely, in that tweet thread, you mentioned that there will be money printed, and you also linked to a chart that's in your most recent essay. So can you expand on that thought?
So the global monetary order doesn't work for China and the United States in its current situation, right? And so it started breaking down in 2008 in the global financial crisis, when instead of allowing the credit to extinguish, the US said, we're just going to print a fuck ton of money, right? That was the start of the breakdown of this order. And now Trump is just accelerating it. He didn't cause it. He didn't come up with this idea out of his own mind. This is something that was already going to happen. It just might have taken a little bit longer if he wasn't in office, pushing buttons. And so as somebody who has a portfolio of gold and a lot of fucking crypto, what do I want? I want more fiat money printed. That's my portfolio is geared. And so the faster that we can get to this end game and stop fucking around and playing with this, oh no, we're not going to print any more money nonsense that people are saying in various central banks, the faster I make more money. So these tariffs are great, right? It's just forcing that was something that was already going to happen and take longer to happen quicker. And we're forcing countries to do the changes they would have done anyways faster. And now we're seeing all this volatility in the market up and down and which ways. And that's why I'm, very happy that these tariffs are happening. I don't have an opinion on whether they're good or bad for America or China or, the world economy, whatever. It doesn't really matter. That's not really the lens that I'm looking at this through. These are super disruptive. It's accelerating a change that was going to happen anyways. And we know philosophically and ideologically that all major politicians in the major four economic blocs, United States, China, European Union, and Japan, do not want to do austerity, because austerity loses you elections. Austerity leads to revolutions. Austerity means, hey, we spent a bunch of money, we didn't have it, so we're going to let a bunch of people go bankrupt. There's going to be some pain that we're going to take. That is not a palatable political strategy. I know Argentina is doing it right now, but they had 60 years of Peronist money printing before they got to this point where they said, okay, we've tried this enough, let's try the other thing, austerity. The rest of the world is not on that playbook. The rest of the world says, we're going to accommodate fiscally, monetarily, print the money, and it's all going to be all right. Even Trump, yes, he says he wants to reduce waste and fraud and cut the deficit, but he didn't say he wants to go to a surplus. He wants to go from a 7% deficit to a 3% deficit. It's still a deficit. The $36 trillion of debt will still expand exponentially. So no one globally in major economic blocs is talking about doing anything other than printing money, and they call it different names. They're not talking about austerity. So when you have a global upheaval of these tariffs, which is we're going to reverse the imbalances that the United States and China essentially have built up over the last 30 years, what is the response? The response is, oh, there is pain to be had. We, the government, will make sure that you don't experience a lot of pain, populace. Therefore, we will print some money in some way, shape, or form. And so that's what I'm betting on.
So coming back to the point you raised there around Trump trying to target 3% budget deficit, and this is obviously relates back to the dominatrix in your story, Mr. Besant. Now, I'm curious to get your view on, because this is it seems to be driving a lot of the economic thinking around what the US is trying to achieve, at least in the short to medium term, and that's his 3-3-3 goal, right? So are you familiar with the 3-3-3 strategy?
Yes.
for Besant? Yeah. So I'm curious, do you think he will be able to achieve this goal, or do you think it's a bit pie in the sky?
I think it's achievable. I think that people are drawing the wrong conclusions if they're successful. I think there's still going to be a lot of money printed at the end of the day. I don't know how stocks are going to perform. I'm not really, an FX strategist and those sorts of things. I only care about, will there be more units of fiat in the world? Yes. He's telling you already that. It's 3% deficit. The deficit is still growing. It's already 36 trillion. It's growing exponentially. The math is math, right? So that's what he's saying he's going to do. If he's not successful, it's worse. This is going to be worse. So, I think we already know the answer to what's going to happen.
Okay. Yeah. As it relates to traders, all that matters is the flow of the liquidity, right? How do you think so? Because obviously now this the first salvo has been fired. And I think right now the markets are falling because of the uncertainty around whether countries will negotiate or whether they'll retaliate. And obviously being the biggest one in the firing line, China. I'm curious to get your take. And you've lived a lot of your life out in Asia as well. And you probably know a lot more about how, the policymakers in Beijing think. Do you think that they would respond?
I think that Xi Jinping, whether he personally wants to or not, a lot of the very wealthy people in China want to find a way to do a deal. I think Trump wants to find a way to do a deal with China. However, I think that the facts on the ground, there cannot be a deal from a fundamental perspective, because what does America want? America wants China to do not do the thing that raised 400 million Chinese people out of poverty, which is we're going to massively invest in infrastructure, and then we're going to take that excess supply and build and send cheap goods all over the world and take those earnings and then buy financial assets with them. That was their strategy. That's how they lifted all these people out of poverty over the last 30 to 40 years. This is what the Communist Party's deal is with the people. We own your life. You have no, freedom as it were in the Western sense. However, you have a job. We will make sure that society is well functioning. There will be social harmony. These sorts of things. And the Chinese people, by and large, are okay with that sort of deal. If Xi Jinping comes back and says, actually, we're going to a new system, and there's going to be a lot of job losses. There's going to be a lot of firms that no longer exist because we're unable to run this economic policy. That is an existential risk for the Chinese Communist Party. I do not see how Xi Jinping can agree to the things that Donald Trump needs him to agree on to rectify this imbalance. And therefore, ultimately, I think there is no deal between the United States and China on a trade basis, and Xi Jinping will let the yuan depreciate and run an independent monetary policy and reflate his economy. That's, I think, what's going to happen. Now, I don't think we're there yet. I think both sides are going to try to find a deal, but we'll know when the deal breaks down by looking at the yuan dollar exchange rate. Right now, it's about like 7.24 or whatever it is. But really, I think we're going to 8, 9, 10 on dollar yuan once Xi Jinping gives the green light to let the currency depreciate, and he can reflate his domestic economy and do what he needs to do to make good on the promises that the Chinese Communist Party made with the people.
That's interesting as well, because that ties into my next question, more specifically around exchange rates and the impact that's had on global trade, and specifically the imbalance potentially around the US trade with China and them accusing China of being currency manipulators and things like that. You're familiar with the Mar-a-Lago Accords, where the senior economic advisor wants this plan to potentially bring down the value of the US dollar by forcing other countries to, accept things like century bonds and security guarantees and things like that. That's obviously the long-term goal around the strategy that's being employed right now. I'm curious, do you think that, especially as it relates to potentially money printing and devaluing the US dollar, do you think that's the ultimate end goal? Do you think they'll achieve that?
I think it's going to be very difficult to achieve a lot of those things because they're bilateral agreements, right?
Yeah.
You have to tell this other politician to go back to your domestic people and say, I'm going to take a 90% haircut on these bonds that I bought with your savings. And then they've got to get reelected or not face a revolution. So I think it's a very, very tall order for a lot of these things that Moran and some other strategists have proposed as to how to rebalance this order. But at the end of the day, they'll try something, and there's a menu of options that different strategists have put forward on how to rectify these balances. But if you notice, the central theme is dollar must weaken, money must be printed. So I don't know what it's going to be, how it's going to change in the details, but I do know that the dollar will weaken and money will be printed, and that'll be the end goal. How it happens is, that's up to diplomats and politicians and finance ministers and all that kind of stuff.
Yeah, and of course, money printing is good for risk assets. And, so this comes back to, of course, other projections as it relates more specifically to Bitcoin. And last year, you said that Trump's inauguration was going to be a big sell the news event, which it seemed like it was exactly that. And that's exactly what happened. But in your most recent BBC piece, you said that if you were to place a bet on whether Bitcoin would hit 76,500 or 110,000 first, you'd put a bet on the latter. So you think, obviously, right now, what we know happened yesterday, do you think that's still the case going ahead?
I think it still is the case. I think that Bitcoin is going to start to look through all this tariff noise and focus on the certainty. We know that money will be printed. We know that the Fed is on board with providing the accommodation needed to make this transition as palatable as possible for the United States. We know that China eventually will let their currency depreciate and flood the world and its domestic economy with yuan and increase the money supply growth. We know that Japan might retaliate by letting the BOJ ramp up money printing and let the yen go to 160, 180, 200, whatever some value. We know that the European Union, especially Germany, wants to build their own army because, they don't have the US support like they thought they did. And they have this, irrational fear of a Russian invasion. And so they're going to justify printing trillions of euros to build bombs, right? And so all the major economic blocs are going to respond to this change in their own domestic way by printing money. And I think slowly Bitcoin is going to start decoupling from the Nasdaq 100 and S&P 500, which has been pretty tied to, in the recent, few quarters or years. And it's going to focus more on what's coming out of these finance ministers' mouths and these politicians' mouths about their plans for how they're going to create money growth and reflate their economies in nominal terms. So I think that the Nasdaq is, a secular sell just because US exceptionalism, especially in the tech basis, is going to decline and foreigners are going to be repatriating, selling what they can to fund the programs domestically that they need to fund. And so, I don't think stocks are going to do very well in the US sense. I think Bitcoin decouples from this, it's just a proxy for the Nasdaq 100 with higher beta narrative very, very quickly, which is why I think 76,500 is going to hold or might not even be retested. And shortly, as the market says, oh, okay, what happens when the world order changes? The politicians print the money. And so therefore, Bitcoin starts to outperform, starts to look more like gold, which is, trading very well into this global monetary order change phenomenon.
Yeah, it's quite fascinating because right now Bitcoin's at about 84,400 the moment we record this interview. And in the traditional financial markets, we had the biggest fall on Wall Street yesterday since 2020. If I recall, the Nikkei was down by 3% today. Futures are down as well. So do you think that this is potentially, we're already starting to see a bit of this decoupling right now, at least in this very short period of time?
I don't know about that. I still think there's some more pain to be had. So, right, we've had the initial reaction. Now we get the hope, there's going to be negotiations, right? If I look on my Bloomberg, go sort of, it's like, XYZ country is open to negotiate. Trump says, yeah, if you give me a great offer, I'm willing to negotiate. So we're going to have these headlines probably over the next few weeks of people trying to make a deal, right? And then slowly it's going to realize that people are like, Trump ain't playing. He really is about fixing that imbalance in that chart. And you domestically as a politician, to do the things Trump wants you to do, you will not be in office in the next 2 to 5 years. People will vote you out or there'll be a revolution. And so you can't agree to the things he needs you to agree to because it's just not politically palatable. And so I think it's going to take a little bit of time for that message to get through. It's also going to take a little bit of time for people to re-rate their valuation multiples on US stocks, right? So I think we're going to get a great relief rally as people hope that something other than what has been advertised will happen. And then as people start to realize, okay, well, if there's not foreigners buying all these stocks, why am I paying, 40 times PE for these companies? If, Chinese tech has surmounted the semiconductor ban, has built, cutting edge AI models, DeepSeek, there's some other agentic AI, really cool things that are coming out of China as well. Do I really want to pay for this CapEx build out of Microsoft and Google and all these companies? I don't know. They're still great companies. They still make money, but I don't know if I really want to pay 30, 40, 50 times 12-month forward earnings for these things. And so I think that's going to take time as well. And I still don't think that we've broken this narrative that Bitcoin's just high beta Nasdaq. And so it's going to trade pretty in line with the stock market for a bit. And then slowly as people start to realize and start to see what the central bankers and the finance ministers are actually doing, preparing for this change, then we start to decouple. So I don't think that we're out of the woods yet in terms of Bitcoin just following the stock market. I do think we're going to go back to close to 80,000. Maybe we break it down to the 70,000s again. But yeah, we're not out of the woods yet.
Okay, short term. Well, indeed, we're going into a weekend, and Bitcoin's one of the few risk assets that you can trade on a weekend. So
exactly. So imagine all the headlines are going to come out by X. Yeah. I saw so and so going to Mar-a-Lago on their private plane. It must mean they're going to make a deal.
Yeah, exactly.
And then these tariffs, that's not happening.
It's the only way that they can take a proxy bet on the risk assets over the weekend, and then Trump comes out and tweets something on Sunday evening that completely.
Exactly.
And another thing, going back to, I don't know if it was in the most recent piece or one of your pieces prior to that, but you said that if we break through the 110K level, then we could easily go to 250K this year. So based on the current backdrop, is that still on the cards?
Absolutely.
If conditionally.
Yeah, I think the liquidity is going to be there, especially by the end of the year. If you think about the United States, the Republicans have an election to win in 2026 to keep their majorities in the House and the Senate. We know that Trump is already concerned about his thin majorities in the two houses. I forgot the name of the person, but there's an appointment to some cabinet level position of a sitting congressperson, and Trump rescinded that nomination because he wants that person to stay in their seat, because these seats are being hotly contested in these special elections going on in the United States, and he wants to make sure that he has the majority he needs to push through his policies. So there is pushback already politically in the United States, and the Republicans are going to face a stiff challenge in 2026. So yes, Trump's front loading the pain now. I think by the end of the year, it's going to be a completely different tone. It's going to be, look at all these factories that have, pledged to do this, that, and the other thing over the next, 2 to 5 years. Look at the rebound and inward foreign direct investment into the United States. Look at the rebound in the stock market. Now, it could be that the S&P is trading at a 4 handle, and it goes 4,200 and it's up, and over that little time period. But the narrative is going to shift to look at how we're rebuilding the American economy for you, the average American voter. Not look at how we're attacking all these foreigners who've taken advantage of us over the last 30 years. And so when that narrative shifts, it's going to shift with money being printed behind it. And I think that's what's really going to reflate the world. And obviously, you have other countries around the world as well who are going to follow the United States in reflating their own domestic economies.
Just keeping with Bitcoin and Trump a bit more, when it comes to, I'm keen to get your thoughts on the Bitcoin reserve, right? So it seems that market expectations ran away with themselves a bit hotly before the actual announcement, thinking that they was going to go out there and potentially buy all this Bitcoin, whereas it's been now just simply going to be, we're going to hold the Bitcoin we have. So I'm curious as to, and you've mentioned this, I think, in your most recent piece as well, the Lummis proposal to potentially revalue gold and then use this as a budget neutral method to potentially purchase more Bitcoin. Do you think that's realistic?
I am still skeptical that I think they will revalue gold. I think that's going to happen. I have a high likelihood. Questionable whether they take some of that money and they go and they buy Bitcoin. I only say that because this is the political optics of it aren't the best. Trump is supposedly the every man and woman president, the person who doesn't own a lot of financial assets. Yes, he has a very vocal and wealthy crypto cohort that has supported him in the last election. But if you think about his true base, it's people without a university education who make less than $100,000 a year who've gotten harmed by the globalization and offshoring of the manufacturing base over the last 30 to 50 years. Is the message do you want to send that you're going to print money or create money by devaluing the dollar versus gold and handing it to Bitcoin bros? I'm not sure that that's the most palatable political message. That's just me. If I was a politician running for election, I'm not sure that would be my strategy. Now, I just read a report from a strategist that this the Lummis bill, the revaluation of gold and buying some Bitcoin with it, seems to be gaining traction amongst people it needs to gain traction with in the House of Representatives. I mean, I can't really handicap whether that's just rumor or not, but again, it's on the table. I am of the opinion that they won't be buying Bitcoin with that revalued those dollars they create by revaluing gold. But I do see other people saying that this is gaining steam in the circles that it needs to gain credibility in.
Yeah. Do you think any other countries, because this is also one of the theories going into Trump's announcement of the strategic reserve and this geopolitical brinkmanship or 21st century gold rush for Bitcoin by nation states, do you think any other countries could follow in this footsteps of the US in terms of any sort of reserve of any description for Bitcoin?
So I think people are missing the obvious one, which is mining, right? So China local governments mine Bitcoin. They have been mining Bitcoin for a very, very long time. They probably have hundreds of thousands of Bitcoin. They're not going to tell you about it, but we know that there's about 20% of the hash rate in China, and supposedly Bitcoin mining is banned. So we can assume the local governments in China are mining Bitcoin, and that is probably part of their national stockpile. We know that some of the large Middle Eastern oil exporters are using some of the excess energy and starting up mining operations to mine Bitcoin. So I don't think that countries are going to print money and buy Bitcoin. Do I think that countries who have energy surpluses are going to use some of that and save it in the form of Bitcoin? Absolutely. And we've already seen that happening. So I think we just have to adjust our expectations about what we mean by a Bitcoin strategic reserve and how it's funded. I just don't think it's politically palatable to outright print money and buy Bitcoin. Yes, you can save it using energy surpluses, or you have a state-sponsored mining capacity because you have very, very cheap electricity. That's already happening and will continue to happen. So I think it comes through the mining aspect, not through the money printing aspect.
Got it. Okay, so that's Bitcoin. And I think that for the most of us who've held Bitcoin, we've held up quite a bit over the past few months. And indeed, but unfortunately, for those who have been an altcoin heavy portfolio, that's what's been driving a lot of the sentiment. I'm sure you've seen a lot of the negative sentiment around, well, in crypto Twitter in general, because of the altcoin being decimated, especially as relates to Bitcoin versus Bitcoin. So my question is, what's your view on alt right now? Is alt season dead?
So, I mean, if I looking at my charts right now, Bitcoin dominance continues to rise. It's like something like 62% or something like that. I think it continues. Maybe it touches 70%, something like that. Ultimately, I think there's just not a lot of exciting projects out there. So what did well in this last cycle, 2022 to 2024? We had Athena, obviously, this breakout synthetic dollar stablecoin product. We had liquid restaking in the ETH ecosystem, EtherFi, Eigenlayer, those sorts of projects. But we haven't really seen a lot of other like new things in the cycle. And then we had meme coins, right? So we had this sort of aversion to these highly priced projects emanating out of these, VC funded things. And we went to meme coins because people felt that they didn't have a chance to actually generate any real wealth. Obviously, as it was advertised in the tin, 99.99% of meme coins never made it above something like $100 million market cap. They're completely worthless. And, we're seeing trading volumes drop off a cliff and pump fund. And that is to be expected. Everybody knew this was going to happen. But at the end of the day, there's a lot of capital that's just been essentially handed over to trading firms and, pump fund type operations and didn't go into the altcoin space. And so I think that is why we have had such a tepid, alt season, if you want to call it that. And I'm not seeing that change in the near future. I think what's going to happen is Bitcoin dominance will continue to rise. At some point, let's say Bitcoin over 110,000, people will get the itch to buy altcoins, and they're going to look for a project with revenues, with users. And that's very, very few projects. You probably could, probably less than 100 or 50 projects have those sorts of real numbers in size to justify you buying these things. But they're going to be very, very cheap because they've been so unloved for so long. So I think, when I put on my Maelstrom CIO hat for the liquid part of our portfolio, that's what we're really going to be focusing on because, founders are still pricing their pre-seed rounds too expensive for us. We're not going to participate in those things. However, quality things that have, proven that they have Lindy, that they can withstand market turmoil, that they have monthly active users, they have revenue, positive profitability at the protocol level. However, their token prices have gotten completely decimated. I want to be in that because I think that is the segment of the market that will attract both institutional and retail capital when we get the next alt season. And that's what we're going to fall in love with again as crypto investors.
Okay, just a few things to follow on there. I think my first question is, okay, as it relates to alt season in general, obviously alt season is generally understood to be that when Bitcoin dominance falls and alts in general as a collective rise. Correct. In relation to that. And the most recent one, obviously, is the 2021 alt season where, you had this all amounts of altcoins just rallying potentially out of the liquidity that came from the stimmy checks in around the pandemic. So do you think then that we could go to a stage, let's say when this liquidity comes, do you think that, obviously you mentioned that quality projects they have to be quality projects and they have to be well priced, and that's true. So do you think then if we do get this liquidity and if, let's say, Bitcoin does break 110K and there is this rotation into alts, that we could see Bitcoin dominance start to fall? Or is it just going to be a few select alts, like you mentioned, that have value that are going to, send, while the rest of the altcoin sector, which is still still doesn't have product market fit and are overvalued, are just going to languish? So what sort of altcoin season of any, or indeed an altcoin season more broadly in terms of Bitcoin dominance, do you think we're going to see if we do get the break of 110K and if we do start seeing liquidity coming back into the crypto space?
Yeah, so if it's already a coin that's listed, I think already listed coins are going to have product market fit, clients, and protocol profitability. those will be the things that people buy. There will be a new thing. I don't know what that's going to be this next go around. And of course, people will be selling Bitcoin to buy the new thing, the new unproven shiny toy that all the traders want to trade. Whatever that narrative is, I don't know what it's going to be. We'll have one. They'll be unprofitable, hype, smoke and mirrors, dreams, all that kind of stuff, right? We'll do it all again in a different narrative. Again, I don't know what it's going to be, and Bitcoin dominance will fall. But if you have a token that's already listed and you haven't been able to get any clients and you have no profitability and you have no revenue, I think you're in serious trouble.
So it gets a lot of projects right now, man.
Yeah.
There's a lot of layer ones. There's a lot of projects out there that are probably in the same bucket. So that's interesting. Coming to one of your comments around potential projects that there's not really strong product market fit now. And I'm curious because you obviously have thoughts on this as well. And you've been tweeting about it last week. And that's one of the breakouts in the past few months has been Hyperliquid, of course. And they've had pretty good product market fit, right? In terms of traders who wanted to trade on it and all of that. So obviously, firstly, I'm keen to get your thoughts on Hyperliquid more broadly, and then more specifically as it relates to the recent fiasco with the jelly market manipulation, whatever. I mean, if people don't know the reference, then please go and they can DYOR. I mean, yeah.
I'm super bullish on Hyperliquid. I think what is crypto? It's rampant speculation and like some stablecoin shit, right? I'm cribbing some other people who this barbell of crypto alt projects. So obviously, I made all my money in the exchange space. That's no secret. The richest person in crypto, CZ, is an exchange owner. You think about all the large family offices or private crypto money all comes essentially either exchanges or miners at the end of the day. And so if you have a new exchange model, I mean, it's not a new model, but a very well executed, supposedly decentralized exchange, you can quibble about whether that's true or not, but it doesn't matter. The narrative is it's a DEX. It's been able to go from 0 to like 10 to 20% of Binance's volume on futures contracts and perps in the span of 12 to 18 months. Very, very impressive, right? And people are using Hyperliquid. The Hype token didn't have any VC backing. They used the token very intelligently to incentivize traders to come on board. The people who held the Hype token have made a lot of money from I think TGE to like 6 or 7 months ago at $3. Now it's at 12 or 13, whatever it is, went up to 30. So I think it's going to do very, very well in this next cycle. And especially if it continues to eat the lunch of Binance and the other large centralized exchanges, which leads obviously to the jelly fiasco, which in my mind is, all us centralized exchange owners who've built these futures and derivatives platforms have encountered all the same issues that Hyperliquid is facing today. My message to the developers is just read the manuals on all the exchanges. Everything that you need to do is right there. We've dealt with all these problems on our platforms. We've documented how to do it, and we have policies in place to mitigate these things. So they just need to read the fucking manual and fix their shit at the end of the day.
That's fair. I guess the heart of the issue here, and in terms of what they did in order to rectify it, what's caused a lot of the fiasco was the fact that they potentially chose an oracle price, a settlement price that was below the entry price. And as a result, HLP actually ended up in a profit. So, I mean, obviously, yes, they made changes in terms of limits and the things that would prevent this kind of thing happening again. But do you think their decision to roll back the trade to a prior oracle price that wasn't the actual market price is a dangerous precedent that was set? Or do you think it was the matter of they were faced with the situation they had at hand? They didn't want the HLP Vault contributors to lose funds. I mean, do you think that?
So I don't know. I don't know the financials of Hyperliquid. So I think the little bit that I read about it, the loss is something like, I don't know, 15 million US, something around there to the HLP if they had kept the real market price of Jelly. So then the decision matrix is, okay, well, if I do this centralized kind of fugazi operation, I could erode trust in this core tenet of I'm a decentralized exchange. Okay. But on the other side is, can I afford decentralization? Is there $15 million where I can make HLP whole? Or would this be a, extinction level event for my business or my protocol if I allowed the free market to operate? Again, I don't know how those numbers looked internally. But if you're saying this is an extinction level event, fuck it. You do what they did. And then you suffer the consequences later. But at least HLP holders know that they have a heads I win, tails I lose situation. They're going to continue to fund into the HLP and stake their capital and increase liquidity on the platform. Users know that the protocol is going to operate in the interest of honest traders that they believe are honest traders, and are going to operate not in the interest of people they believe are adversarial, right? And so I think at the end of the day, traders don't give a fuck about decentralization. They care about making money. And so if you said, I'm going to make sure you make money or you're safe, okay, I'm going to trade in your protocol. All these philosophical, moral hazard, adverse selection stuff doesn't fucking matter as long as I make money. I can wax philosophical when I'm rich as fuck. And I think that's how traders view it.
Wax philosophical when you're rich as fuck, man. Yeah, that's true. You got a lot of time to think about it. You don't have to worry about making money. You got the money. You can just sit there and ponder about the philosophy of decentralization. It's actually interesting because the thoughts around they potentially, if they had potentially not bailed themselves and not chosen this Oracle place, it would have created also a precedent in the sense that they would see many people who would consider exploiting the protocol itself may think, oh, okay, well, the Hyperliquid team wasn't going to go and step in, and they're going to accept, even if it was an adverse trade for them, and it's a good opportunity to exploit it, to go again and again. So potentially they've also set the precedents, put their foot down, saying, if you misuse the protocol, well, we're going to adjust the price as we see fit. So it's interesting. So going back to other two really big altcoins in the space right now, a few weeks ago you had a tweet that said you think that ETH will hit 5K before Sol hits 300. Now, my question to you, was that engagement bait, or do you actually believe that?
The way I'd couch this answer is, if I had a fresh unit of fiat and I had to decide if I'm going to buy Ethereum or Solana, I would buy ETH. Why? Because when the cycle turns, I want to own the most hated thing. I don't want to own the most loved thing of the previous cycle. That's what outperforms. And so all I care about is outperformance. People hate ETH. Oh, it's this, that, and the other thing. But at the end of the day, ETH is the most secure layer 1 blockchain by value staked. It has the largest developer ecosystem. Every single major DeFi primitive started on ETH. As an investor, and we see lots of projects, the most exciting things and the most innovative people are still building on Ethereum. Yes, there's a lot of Solana developers and obviously Aptos and other ecosystems. But if you want to talk about the OG, it's Ethereum. But people are hating on it for the tokenomics and all the layer 2 vampires and all the things. There's some valid concerns there. But again, if I'm talking about a cycle turning, I have a fresh unit of fiat, I want to own what is hated in the past cycle, not what was loved. So that's why I think, ETH can retake its all-time high before Solana can in this next run-up. And all it takes is, some green candles on ETH, and all of a sudden, all those concerns that people waxed philosophical about on crypto Twitter go away, and they're all of a sudden they're ETH bulls. Oh my God, Ethereum is the most, and they're gonna punt. Oh no, they have the most developers. Oh, there's the biggest, they're the most secure block, the most decentralized.
The .eth will come back on the Twitter account again. The .eth will come back. They'll come back. They'll feel proud to be .eths again. No more of the memes. Yeah. Price drives narrative, right? That's true. In terms of you or your fund, do you still hold a lot of ETH versus Sol? Like, how is your position on that?
I don't own any Solana. We own a lot of ETH. We're not allocating to either with any fresh units of capital right now. It's mostly Bitcoin is what we're buying. And when we believe alt season is going to turn, we have some projects that we're very interested in that are showing some very good product market fit, very good cash flows, very good profitability at the protocol level. And that's what we believe is really going to outperform in this next run up.
Keeping with that, so these projects you've been talking about, the product market fit, the revenues, what other altcoins then are you interested in that you find and you're also allocating towards? If I recall, last time we chatted, you were bullish on Aptos. Is that still the case? And what other projects are you looking at right now that you're excited about?
Yeah, so obviously we're an advisor at Aptos. We just had a conversation with the team. I think the new management there is laser focused on getting retail adoption, bringing trading flows on chain. They're very energized. They have a fire under their ass. They have something to prove. So I like them. Obviously, a hated project, not hated, but something that hasn't really performed that well over the last little mini cycle. I think they could be an outperformer in this next leg higher. Obviously, we have a big bag of Athena. The Converge, their bringing of TradFi assets and collateral onto this basis trade and allowing them to access this. I think this is a great thing. It's going to drive a lot of TVL on their platform, and obviously the token price will appreciate that. And another thing I'm very excited about, just got off the call with the founders of EtherFi, and I think that I'm not going to spoil their upcoming announcements, but I think they're building something that I've wanted for a very, very long time, and a lot of people have tried and failed. And finally, we're going to get this thing. I'm not going to say what it is. I'll leave that to them. But I think that EtherFi is going to be a sleeping giant and really explode higher as we, get this liquidity injection in the fiat space.
Come on. Do you still hold any memes? Dog with hat or any of the other stuff you...
I got a bit of Trump. I think
chicken
that...
fish, or the other ones you smoking chicken fish? Or?
I got all of those. I think I had held a cheeky Trump punt, just treat some sentiment changes, have some fun.
Yeah, that's cool, man. So just quickly switching gears here, I'm curious, and feel free to pass on this question, but you were recently pardoned by the man himself. So my first question is, how did that feel? And then secondly, do you think he's a fan?
I obviously didn't speak with Trump directly.
You didn't?
We went through the same process that everyone else goes through to, send a petition into the White House. The relevant people evaluated it, thought that we deserved one, and then recommended that Trump sign our pardon. And, thankfully the administration did. I think he's probably busier thinking about tariffs than, random crypto bros.
Well, you're saying that. None of you there, like, I chose that pardon because, I've watched a lot of Mr. Hayes interviews, and I like the way he thinks.
I would be flattered if he did. I'm not sure. I'm not sure if he does, though.
So I think it would just to finish off with, I think it'd be great to, like, maybe this is, of course, crypto YouTube, good to fire out a few predictions. And we've obviously covered a few of these again, but just get them out in raw numbers. So some rapid fire questions on predictions. So I'm curious, firstly, Bitcoin cycle top price, and when do you think we could see that?
I think Bitcoin cycle top 2027. I'm going to go out there, top price, $1 less than $1 million. So 9999999. I think 6 nines.
There we go. Okay, got it. There we go. 999,999. That's Arthur Hayes' cycle top 2027 prediction. Next altcoin ETF. I'm obviously doing a lot of buzz around altcoin ETFs. Do you think which will then be the next one? First of all,
Solana. I think it's the obvious choice.
Okay, got it. Will this is also an ambitious one. Will the ETH BTC pair slide? Will that stop anytime soon?
Yes.
And when do you think it could happen?
I think that stops in the fourth quarter. When we get a cycle turn and we really get this explosion of fiat liquidity globally.
This rotation. Yeah.
Will
keeping with ETH, will any coin ever flip ETH's market cap?
Ooh. Any L1, you mean? Or you saying any coin flip number 2?
In the capsule of time. In the next 5 years, any coin of any other altcoin, obviously, that will flip ETH.
Do you consider Tether an altcoin?
That is true. Okay, let's exclude Tether from that equation then. Any stable coins, because obviously that's obviously we know stablecoin growth is going parabolic for sure.
I don't think that any other coin will eclipse Ethereum's market cap.
Not even XRP. The XRP army, bro, with the XRP army. They
don't mad at me, XRP army. No fucking chance.
Those guys they're hardcore, man. They can push the price, and the supply is very tight. So at least circulating. But okay, and then one more. So, what's the biggest crypto news story over the past month that no one is speaking about?
That I have no idea. I don't have any. Anything that people are not appreciating.
Yeah. Okay, cool. Well, that's a great way to finish off, Arthur. Thank you very much. It's been a great discussion. Of course, we'll leave a link to your Twitter as well as your Substack in the description. I also do believe Maelstrom is going to be having one of your infamous parties around Token 2049.
Absolutely.
Is that correct?
And so in Dubai on May 1st on Thursday, Desert Rave. It's going to be lit.
It's going to be lit, man. It's Dubai. No, it's like, do you think it will be as crazy as the one in Singapore 2023, if I recall?
No, there's not going to be people climbing over the walls. We have a proper venue and all those sorts of things.
If enough people sign up, then you never know, man. And if it gets that crazy. True in Arthur Hayes Maelstrom fashion. But yeah, we'll leave a link to that down below as well. And yeah, thanks again for coming on, Arthur. Great discussion, and hopefully we can do it again soon.
Absolutely. Thank you for having me.
Come on. Cheers.